I get a lot of questions about this, about what is crypto trading, what is leverage trading, how do I make money with crypto trading. A lot of people wanting information on this. So this what this video aims to do is aimed at probably you if you're a beginner, whether you've traded a little bit or you've never traded before. I'm going to explain a lot of the basics, excuse me, and hopefully it makes a lot more sense for you and you're able to get started, because I'm going to start this out by saying leverage trading is the most powerful way to accumulate crypto. So let's just, without any other further ado, let's try it out. So let's dive into it. Sorry, I have something in my throat, but I'll do my best to power through it. So crypto trading 101. First question, what is trading? What is trading? Trading is not when you go on Coinbase and you buy crypto and sell crypto. That's not trading. Technically, I guess, yeah, that's some kind of trading, but it's not trading. That's not what we're talking about today. Trading is when you actually bet, when you actually predict, when you attempt to predict which way the price is going to go. And the difference is, say you go on Coinbase and you buy some Bitcoin. Say you buy an entire Bitcoin for $60,000. Now, if the value of one Bitcoin goes up to 66,000, you just made 10%. Isn't that great? Your one Bitcoin is now worth $66,000. You've made a 10% gain on your asset. Okay? Now, you still only have one Bitcoin though, right? Your one Bitcoin is just worth more money. That's not trading. Trading is this. Say Bitcoin's at 60,000 and I trade an entire Bitcoin on something called a long, which we'll get into in a second. What happens when that Bitcoin goes from 60,000 to 66,000, I now have 1.1 Bitcoin. And my Bitcoin is still worth 66,000, so I got that price appreciation. But now I actually have more Bitcoin. And this didn't cost me anything to do. I did a trade, which means I predicted which way the price was going to go. And I was right. And if I'm right, I actually get more of that asset. So if I'm trading Bitcoin, if I'm trading Ethereum, whatever, when I trade it, I get more of it when I'm right. Okay? And it is much, much easier to be right than you think. We'll get into all that too very soon. So that's the difference between trading. Let me recap that. If you go buy a Bitcoin on Coinbase for 60,000 and it goes up to 66,000, now your one Bitcoin is worth 66,000. If you trade one Bitcoin and it goes up to 66,000, you now have 1.1 Bitcoin because it went up 10%. And 10% of one Bitcoin is 0.1. So now your Bitcoin is worth 66,000, but you have an additional 0.1 Bitcoin. So now your total value there is, well, what would that be? 66,000 plus 6,000. So now you have $72,000 of value. And more importantly, you have 1.1 Bitcoin. We're going to dive into that. Just stick with me. I'm going to lay all this out. I'm going to draw it out. It's going to make a lot more sense. And leverage trading just means you multiply. So in that example I gave you, when you trade one Bitcoin, what leverage trading allows you to do is to trade with more Bitcoin or whatever than you have. So if I place a trade with one Bitcoin, I can do, say, a 2x leverage trade, meaning now I'm trading with the power of 2 Bitcoin. I'm going to draw this out. Just stick with me. I'm just getting high level and then I'm going to draw it all out for you. So stick with me. I'm going to keep layering this so that you understand it more and more. So when that one Bitcoin went up 10% from 60,000 to 66,000, now I have 1.1 Bitcoin. Well, if I did leverage trading, say 2x, now I have 2 Bitcoin in the trade at 60,000. Again, I'm going to draw all this out. So when we get to 66,000, guess what? I now have 1.2 Bitcoin because I'm getting the profit from the 2 Bitcoin instead of my 1. I'm going to draw this out, okay? So stick with me there. We'll get into that in a second. So the difference between a long and a short. But I want you to understand, does that sound awesome? If you can, not you don't even have to buy Bitcoin or Ethereum or whatever you want to trade with. You don't go buy it and hope it goes up. You have it, and you just want to predict which way the price is going to go. And if you're right, you get more of it for free. Does that excite you? Let that skeptical part of your mind walk away, because I'm going to show all this to you. It's the most powerful way to accumulate crypto, because if what I'm saying is true, I think you understand why. What I'm saying is 100% true. Trading and leverage trading have been around for a very, very long time. It's nothing new. So the difference between a long and a short. A long is when you predict, when you bet, when you predict that the price is going to go up. And a short is when you predict that the price is going to go down. Okay? And the example I gave you when the price went up, that was a long. It works the exact same way on a short. Now, this is a hard one this is one people have trouble with, because we're so ingrained in our mind that, okay, the only way I can make money is if the price goes up. So it's hard to understand how you make it if it goes down. You don't need to understand exactly how it works. You just need to know that it works. So in that previous example, if I'm trading one Bitcoin at 60,000 and I say, hey, you know what? I'm going to take a short because I think the price is going to go down. And Bitcoin goes down to 54,000. Well, guess what? From 60,000 to 54,000, what is that? That's a 10% move. So now I had one Bitcoin at 60,000. I did a short, and now we're down to 54,000. Guess what? 10%. What's 10% of one Bitcoin? 0.1. So now at $54,000, I have 1.1 Bitcoin. Isn't that amazing? It works the exact same way as going up. Do not let this hang you up trying to figure that out, because it's simple. If you take a long, it goes up, you get that percentage. If you take a short and it goes down, you get that percentage, right? 60,000, you take a long, Bitcoin goes up to 66. Now you have 1.1 because it went up 10%. And 10% of one Bitcoin, which is what you have in the trade, is 0.1. Same thing when you go down as a short. 60,000 down to 54,000, your one Bitcoin is now 1.1 because it went down 10%. So what's 10% of one Bitcoin? 0.1. And if you do leverage trading, you get that multiplied. Even though you only put up one Bitcoin in the whole trade, you could do up to 100x leverage. I don't recommend that. What that would mean is, if, say, I take a long on Bitcoin, right? I'm going to draw that out in a minute. Just stick with me. It's going to make more sense if you're struggling on that. So how do you make money? I think I pretty much explained it to you. You accumulate. You actually get paid in your asset. You accumulate more of it. You don't just, like when you buy it on Coinbase and it goes up, then you make money. But when it goes down, you lose money because your asset, which is Bitcoin or whatever, went up in value and your asset became more valuable, so you made money, or your asset went down and so you lost money. In trading, you make money both ways. And in reality, you make a lot more money because you get more of the actual asset. Like I was explaining. So let's draw out an example here. All right, so we got one Bitcoin in a long trade from 60,000. Okay? And you don't need a whole Bitcoin. You could trade with 0.00001 Bitcoin. It doesn't matter how much you use. I'm just using one Bitcoin so that the numbers are easier to follow. And 60,000, and so we take a long, and Bitcoin goes up to 66,000. So now 66,000 divided by 60,000 equals 1.1, right? Because at 0.1, 66,000 from 60,000, it means it went up 10%. Because 6,000 is 10% of 60,000. Okay? Okay, so now you got that price appreciation like you would on Coinbase, but now you actually have more Bitcoin. Isn't that amazing? Can you imagine that? Can you imagine how much crypto you can accumulate? If you could do that, imagine where you'd be. Imagine what you'd be able to do, because I don't care how much money you have. It can only go so far. I don't care if you have millions and millions of dollars. It can only go so far. With trading here, it doesn't cost anything. It didn't cost me anything. I just put my Bitcoin in the trade, and I can get out whenever I want. My downside is very, very limited because I can get out of this trade whenever I want. We'll get into more on that in a second. So now let's say we did leverage trade on this, right? Same thing, but let's say we did 2x leverage. So we'll do this. 2x leverage. Now you just got the 1 Bitcoin in the trade, but you're doing 2x leverage. The trading platform lends you a Bitcoin. And you know what? You actually get paid to borrow the money, not because the price is going to go which way you want, because you're going to do something called a limit order. A limit order instead of a market order, okay? We'll get into all that too, because I'm going to go through, I'm going to show you how to make a trade and stuff like that. I'll show you what that means. But basically when you do a limit order, you get paid to borrow the money because you are what is referred to as a market maker instead of a taker. So I'm borrowing money for free here. 2x leverage, so now we have 2 Bitcoin in the trade, but the most we could ever lose is actually only 1 Bitcoin, and we won't even come close to losing 1 Bitcoin because we can get out of the trade whenever we want. And we can set something called a stop loss too, which says, hey, if the price comes to a certain spot, just get me out of the trade. Again, if we're doing a long trade, and the price goes down, that's bad for us. If we're doing a short trade and the price goes up, that's bad for us. So if this goes down 10%, well, now we only have, on a long, if it goes down 10%, now we only have 0.9 Bitcoin. Okay? Same thing with the short. If it goes up 10%, now we only have 0.9 Bitcoin. Don't let that scare your panties off. Because again, you can very, very much minimize your losses. You can get out whenever you want. But back down here to the 2x leverage. So if we did 2 Bitcoin, guess what? We would now have, because what is, if the price goes from 60,000 to 66,000, right? That is 10%. So now that we did 2 Bitcoin, now it's 1.2 Bitcoin is what we have. Because we had 2 Bitcoin in the trade. So change this to, 2 Bitcoin in a long trade from 60,000. But again, you only yourself had 1 Bitcoin in the trade. But you use 2x leverage. So now they lend you another Bitcoin and you get the profits from 2 Bitcoin. So if it goes up 10%, like it did in this situation, on a long, you now get 0.2 Bitcoin as your profit. And you add that to your 1 Bitcoin that you actually own. Isn't that amazing? Isn't that absolutely mind-bendingly amazing that you can do that? And now let's go to the short. Because this is going to be, you thought that was amazing. This is even more amazing. Because now if you learn to trade, which this is a very, very learnable skill, like riding a bicycle, like throwing a ball, like driving a car. Yeah, at first it's a little shaky because you have no experience. But you quickly pick up on it. And you may fall once or twice and skin your knee, but you're okay. You just learn from that stuff and you get better and better. It's a skill and it doesn't really take that long, especially with what I'm going to show you how I do it. You should be able to get up and running pretty quickly. I can't guarantee anything because I can't guarantee the decisions you make. None of this is financial advice. This is just education, okay? Now let's do a short. Let's say we do, 1 Bitcoin. Geez, if I can type. On a short trade from 60,000. Price goes to 54,000. No leverage. Would be 54,000 out of 60,000. I'm not dividing, I'm just showing that. Equals 1.1 Bitcoin. Why? Because it went down 10% from 60,000 to 54,000. I suppose I should draw this the other way to actually make it work out. Okay, that would be 1.1 Bitcoin. This would be 1.1 Bitcoin, this exact equation, and this would be 1.1 Bitcoin. Now, if we did, so really what this was up here was we took this 66,000 divided by 60, and let's just stay down here with the short. Sorry, I don't want to confuse you more. So now again, if we did leverage, 2x leverage, that would equal 2 Bitcoin in the trade times 0.1, because 0.1 is 10%, right? 0.1 is 10%, equals 0.2 plus your initial 1 Bitcoin that you had in the trade, equals 1.2 Bitcoin. Let's get a little saucier. How about 10x leverage? What do you think is going to happen there? Let's do a long. Let's do a long here. Long. And we're going to do 1 Bitcoin in the trade. Okay. Let's do that same thing at 60,000. So Bitcoin goes to 66,000. So 66,000 divided by 60,000 equals 0.1, 10%, right? But we did 10x leverage, so we're going to multiply that times 10. That's going to equal 1 Bitcoin. So now that 1 Bitcoin plus the 1 Bitcoin we had in the trade equals 2 Bitcoin. Is that blowing your mind? Is that getting you excited? I hope so, because if not, check your pulse, right? I just did 10x leverage. I put up 1 Bitcoin in the trade and I did 10x leverage, so now I'm trading with the power of 10 Bitcoin. And I did a long, so that means I earn Bitcoin as the price goes up. Price goes up 10%, well, 10% times 10 is 1. So now I just double my Bitcoin because the price went from 60,000 to 66,000. At the time of me recording this, Bitcoin literally did that yesterday. Actually, it went from 60 to 68,000 in a day, hitting a new all-time high. Same thing on a short. Check this out. 10x leverage short, and we got 1 Bitcoin in the trade. Again, at 60,000, okay? Goes to 54,000, which that's the way we want it to go on a short. We want it to go down. So so we got to do this divided by 54,000 equals 1.1. Okay? So this is the way you divide it. You divide the price you want to get, the price you're up, divided by the price you got in at. Okay, this isn't a math course. I'm just showing how this works out. And on a short, you divide the number you got in at to the price it went down to. Okay? So 1.1 times 10 equals 1 Bitcoin. Same thing. 1 Bitcoin profit plus 1 Bitcoin initial investment equals 2 Bitcoin. Is that not crazy? You just turned 1 Bitcoin into 2 Bitcoin because the price went down 10%. Does Bitcoin go down 10%? Is that crazy? Does that not happen very much? That happens a lot. So this is how powerful this is. I hope that makes sense. I promise you all the questions you have rolling around in your head are questions that are based on ideas and beliefs that are irrelevant. Not that you're irrelevant, not that your thoughts are irrelevant. I just laid everything out to you. This is exactly how it works. If you have any questions on it, there's the answer sitting right here. This is what happens. The real question is, how do I earn Bitcoin and crypto from trading? this is how it works. On a long, you literally earn, in this case, you earn Bitcoin when the price goes up. You earn Bitcoin. You get more Bitcoin. And on a short, you earn more Bitcoin, in this case, when the price goes down. And you can use leverage to earn even more. Times, which would just be a multiple. If you did 2x leverage, if it went down 10%, you got a whole Bitcoin in the trade and it goes down 10% on a short, you get 0.1. Because 0.1 is 10% of 1. So now you have 1.1 Bitcoin. Same thing when it goes up, of course. It's a little easier for you to understand because our minds are typically, the only thing we really know is that we make money when price go up. So let that just go away because you can earn no matter what the direction is. That's what trading allows you to do. It allows you to earn no matter what the price does, whether it goes up or down. Does that excite you? Is that awesome? Would you like to know how to do that? Does that seem like a bit of a superpower? Are you happy to hear that it's a learnable skill, like riding a bicycle, like driving a car, like throwing a ball? You probably don't remember back to it, but when you started riding a bike or you started driving a car, you had doubt because you've never done it before, even though literally everybody else that's ever tried it has been able to do it. Because why? Because they decided they were going to learn how to do it. And this is not harder than riding a bike. I would say this is easier than riding a bike or driving a car. I'm not exaggerating. Because what I'm going to dive in here next is to show you how I know when to predict. I'm going to show you how I predict which way the price is going to go. I'm wondering if I want to explain this anymore. I don't think I do. I think that this is literally everything you need to know, right? When you do a one-to-one trade, a regular trade, you earn Bitcoin as it goes down on a short, up on a long. And if you do leverage, whatever your profit is, just multiply it by that leverage. If on a one-to-one trade, you earn 0.1, 2x leverage would give you 0.2. 10x leverage would give you, well, 1, because 1 times 10 times 0.1 is 1. If you did 5 leverage, then you'd have 0.5. I think before I go in here and show you how to price predict, I'm going to show you how to place a trade. I changed my mind. I'm going to show you how to price predict first before we go place a trade because that's the way it really works. You read the charts to figure out which way the price is going to go before you place a trade. So that makes sense for me to do this first. Okay. Hit some likes. If you're watching this on YouTube or something, hit some likes. Give me some follows. If you're finding this valuable, go ahead and share this video too. Now down here, this is the secret sauce. This is the cheat code. This is the thing. This down here, these blue waves, this is the cheat code. This is the thing that tells me which way price is going to go. And I'll explain that in a second. It's called Lever Atlas. Okay. It's something I actually made for myself, but I'll tell you how you can get your hands on it too. Okay. But let's dive in. So here we are on the Ethereum chart. Today is, what's the date today? Tuesday, November 9th, 2021. Okay, check this out. These red dots here. Now we are on something called a 1 hour time frame. What that means is each one of these candles here represents the price action in 1 hour. So this green candle right here, this bottom of the candle would be the lowest the price got in that hour, and the top of this candle would be the highest price it got in that hour. And what Lever Atlas does is it calculates all this data to tell us where the tops and the bottoms are. So look at this. This little red dot here pointed to this top, where it's basically price is leveled out for a certain period of time and it gives us a top. Now, one top in and of itself is not enough to make a prediction on. What we are going to be looking for are discrepancies, or they are called divergences. And I'm going to explain that in a second. Now look at this red. And by the way, these green dots down here, see these little green dots? These indicate bottoms. Okay, so what we're going to look for, typically how it goes, let me show you how it typically goes. Typically, if you have a, say right here, this red dot correlates to this top right here before price went down a bit. And now this red dot correlates to here. So typically, as price goes up, these red dots get higher and higher, and as price goes down, these green dots get lower and lower. So what we're looking for is a divergence, a change in that pattern, a discrepancy. Let me show you one. So look at this red dot right here, okay? It correlates to this top. Like, is that a top? Yeah, it's top because the price leveled out for about 4 or 5 hours, and there's even a little red candle. So that's a legit top. Now look at this red dot. Now this red dot here, this top, is lower than this one. So that tells me momentum is going down. Now is price following that? Well, this red dot goes to this top, and this red dot goes to this top. So wait a minute. Price is going up, but momentum is not going up. It is going down. And that's why Lever Atlas here drew this little red line and printed this big fat red dot up here to let me know, hey, a divergence is happening. Pay attention. Because what a divergence indicates is that price is about to change direction. Okay? And look at, there's another red dot lower than the previous two. And the main dot we want to look at is this one, because it's the highest. If this one were to come up higher, we wouldn't care about this dot anymore. But this is the highest one. So there we go. There we go. Oh, that one's lower. How about this price? Well, this high is lower than this high, but it is still higher than this high. So we have more of a divergence forming. And this dot down here is the lowest yet, and it correlates to this top. And this is the highest top yet. So price has very much come up, and it is coming down, and we've gotten way down here close to the zero line, which is where we go up and we go down, the zero line right here, okay? And this little dotted line here, not the one I'm moving around, the one that's permanently fixed, that everything above that indicates overbought, meaning it's overvalued. And down here is oversold, meaning it's undervalued. We like to see a red dot print above this white line to start using it for divergences, okay? Don't let your head ask too many questions, because what you can watch this again, but what I'm explaining is everything you need to know. Your questions will just confuse you. Be sure to hit that like button and check out the links in the description for more on this, because I actually have a whole free masterclass on my website, dailycryptobull.com. But I'm going to show you how to get your hands on this Lever Atlas, because this is the cheat code. This is the thing that makes it all possible, that allows me to win basically every single trade I get in. And with that being said, you can lose more trades than you win and still be wildly profitable. Why? Because you can get out whenever you want. So you can just take little losses, and you can take little gains, and you can take big gains, but you don't have to take big losses, okay? That's what I'm saying. That's the equation. You take little losses, you take little gains, and you take big gains. Those are the only 3 acceptable outcomes, and you are completely 100% in control of that, okay? Price isn't going to just go to hell on you in a minute. And with that being said, you don't go all in on every trade. I only put a small amount of my capital in each trade because I'm methodically accumulating over time. I'm not trying to get rich today. I'm trying to build wealth for the future. And it's not far away. It's no doubt to me that Ethereum here right now, it's sitting at 47, 46. It's no doubt to me that Ethereum is going to be $20, $30, $40, $50,000 within the next 5, 10 years. No doubt. Bitcoin's going to be $500,000, $1 million+ in the next 5 to 10 years. Easy. So my goal is to accumulate, because eventually we're not even going to be able to buy this stuff, because everyone that has it will finally realize the value, and they'll be like, I'm never selling this stuff. They'll realize what you and I already know, and they're not going to sell it. I'm not going to sell it. Now, we're still early enough that I will sell high and buy low. I'll do that. Right now, Bitcoin's at about 66,000, just hit an all-time high of 68,000. Yeah, when Bitcoin gets to 100,000, I'm going to sell a little bit of it. If Bitcoin gets to 200,000, I'm probably going to sell more of it. I'm never going to sell all my Bitcoin, but I feel very confident that the price is going to come back under that very significantly, and then I'm going to take all my profits and just buy Bitcoin again, right? That's what I'm doing. I'm not going and paying bills or something, or paying rent, or buying a Lambo. I'm using every single dollar earned and reinvesting it, because the goal is accumulation. That's what smart money does. That's what big money institutions, they get the best results in the world. They're the best with money. They're the richest. They're the best with money. So let's do what they do, not what the average person does, which is you and me, because we're dumb money. So let's just do what the smart money does. This is what they do, and leverage trading is a massive part of it. So down here, what happened? We got this. First of all, we had this divergence form, right? Price went up, momentum went down. What happened? It went from 46.37 down to 44.60. So what kind of a move is that? About 150 bucks. That's pretty good. That's a what? 1, 2, 3. Call it a 4% move. So if we just went down, if we had one Ethereum up here and we took a short, right? Shorts are how we make money when the price goes down. When we earn more Ethereum, in this case, when the price goes down, we would now have 1.04 Ethereum. And if we did say something like 10x leverage, we would now have 1.4 Ethereum. Are you getting this? You're hearing that right. I'm not making anything up. This isn't hard to do. This isn't, wildness. Granted, I can't guarantee, this isn't financial advice, and I can't guarantee any outcome for you. But this is exactly how it works, and people do this every day, myself very much included, and I am not special. I am absolutely not special. I'm not some math whiz. I'm not anything like that. I just follow this simple chart because Lever Atlas is the cheat code. It just tells me what to do. Now, again, we printed an even lower dot here, and it went down. But we already showed that. But we printed this dot, and what happened? Boy, that really went down, right? So that's what I did is I got in up here, and I got out down here. Why did I get out down here? Because I felt like it was a good time to get out. I felt like it was going to come up a little higher. Now, Lever Atlas isn't going to give you that feeling that I have. That's something I just got with experience. And what I do is I take profit along the way. I don't ride it all the way down, okay? But anyways, this dot printed, and I said, all right, now that one is a really, really good one because it just came up higher, and that dot is clearly momentum is just going down, 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 down. But yet we had another high. So it's like, all right, plus this was like the all-time high. So I got in up here about 46.50 and rode it all the way down to, I actually ended up getting out here at 44.50 because when I went to the 30-minute time frame, this happened. That happened right there. And I was like, well, wait, did I go back far enough? No, this is the one that happened, right? Because here is a bullish divergence. Price is coming down. Momentum is going up. So I said, all right, this is a good time to take my profits. Some Amber Alert just came up on my phone. Jeez. But nonetheless, maybe that's a good alert for you to go, whoa. That's pretty powerful because that's what a bullish divergence is. Price is coming down, momentum is going up, and Lever Atlas here tells me that, hey, things are about to shift. So I said, all right, I'm going to take my profit. I was up, went down about 200 bucks, so that was about 4 or 5%. I was doing 10x leverage, so I made 50% on my Ethereum. That means for every Ethereum I had in the trade, when we got down here, I had 1.4 1.5 Ethereum. With that said, I didn't actually get 1.4 or 0.5 because I took profit along the way. I'm not greedy. My goal is to win, is to accumulate, okay? So when we got down here, I took the rest of my profit out, but I took profit here, I took profit here, and I took the rest of my profit here because I'm not trying to go crazy. I'm not trying to hold it because I want to win every trade. That's me. I want to win every trade. So I'll take part of my position out, another part of my position, and another part of my position. We're going to get into showing you how to place this in a second, okay? But this is the cheat code, Lever Atlas. And by the way, you can get a free trial to Lever Atlas if you go to dailycryptobull.com. The link is also in the description. You can get a free trial. And there's a free masterclass too, which goes into more depth on this stuff, but this is pretty in-depth, okay? So price going up, momentum's going down, boom. Now I have more Ethereum. Price is still going down. Take another short, boom, price. You might have wrote it all the way down to here, but I wrote it to here because I was fine with that. I have more Ethereum. The goal is to have more. And when you start out, if you're new, which if you're watching this, you probably are, just start trading with a small amount, an amount that you can absolutely lose. When I started, I just traded with $200 worth of Ethereum, and I was just placing trades, getting used to doing it. Don't try to get rich right away, because you try to get rich quick, you'll get broke quick. That's the way it goes. So let's go into checking out. Well, let's dive into this a little bit more, just to make sure you got it. I'll do one more example here. So this is the most recent one. At the time of recording this, so we had this dot print right here. And then we had this dot print. And it went down a little bit. But then we had these dots print. And again, we're going off of this one. So these are all lower, lower, lower. And then I saw this one. This is what I was waiting for, was this one. Because it's hard to explain, but at the time, this was a new all-time high for Ethereum. And Bitcoin was hitting its all-time high too. So the market was like extra frothy and bullish. Sometimes it can take a little bit longer for them to cool off. So we printed these, and these were all lower than this. So I knew, hey, I just got to wait for the right dot. And the first one that printed truly below this line was right here. That's a really strong sign. If it prints below the overbought line, right? This dotted line here that's permanent, that's fixed. That's a good one. And so I took a short right here, around 48.15. And at the time right now, we're down. I mean, it's down almost $100 from where I got in. That's really, really good. Right? Because for every Ethereum I had in up here, what percentage is that? Say 48, 100. What's $100 out of here? Right? It's 1, 2, maybe 2.5%. So it's down 2.5%. I usually trade with 10x leverage. So right now I actually haven't taken any profit out of this one. So I did a short. It's down 2.5%. I did 10x leverage. So that means I'm up 25%. So that means every one Ethereum I have in this trade, I now have 1.25 Ethereum. I'm getting 2.25 Ethereum as a profit. Yeah, actual Ethereum. So I'm accumulating, and it's not costing me a penny. I'm not having to buy it. It doesn't matter what my bank account is. Okay, but yeah, I'll probably take some profit out here. I've just been busy. Normally I would have taken some out by now, because this zone right here, right, where this kind of stabilized, got flat, that's usually a sign of support, meaning that the price is going to have a hard time going through it. I think it will go through it, but nonetheless, if it doesn't, whatever, I'm going to take some profit. Yeah, you don't go broke taking a profit. You go broke going broke. Sage stuff. So let's dive into the actual trading platform. I use Bybit. Now, this isn't the account that I mainly trade on. This is the one I use for videos like this, right? Because I don't want you guys seeing my big accounts. I don't want you seeing. You get what I'm saying? Like this is my smallest account. I just have a little bit of ETH and a little bit of Bitcoin in here. So what is this? 0.6 ETH. So what's that? I don't know. Maybe a couple $2,500, something like that. So yeah, it's okay. If you guys hack me, it's not going to end my world. And you can trade all kinds of stuff on here. There's all kinds of different things. What we do, it's Bybit is what we use here. And so we do inverse perpetual, okay? It's USDT perpetual. We do inverse perpetual. And you can trade DOT, XRP, EOS, Ethereum, and Bitcoin. I mostly trade Bitcoin and Ethereum. I might start trading some DOT, though, and some XRP, because those are both projects I'm really, really bullish on. I'd like to accumulate more of those. But with that being said, since you're probably new, you should really only focus on one coin until you get the handle of this, right? So you can start to learn its chart. Because if you're trying to do all of them, you're just going to confuse yourself. Just pick one coin, whether it be, I would suggest probably Bitcoin or Ethereum. When I started out, I focused 100% on Ethereum. And that's the one I would recommend focusing on too, but your choice. Not financial advice. I can't guarantee a damn thing. I can just show you what works for me. So what we would do here, right, we went to the chart. I mean, I'm not going to place a trade here because I don't see a position to get into, because this was the spot to get into. So this little red dot down here, plus this green pile here, this is money flow. So that shows us that money flow is actually on its way down, right? Because there was the top of that green thing, and there it is coming down. When it's red, it's money flow is definitely down below the zero line, okay? And typically what you'll see is when that money flow crosses, price will follow, right? When it got red here, what happened? Price went down. It was already going down, but then when it crossed green here, price was already going up a bit, but then it went up a lot, right? But that's not what we use. I look almost exclusively at these momentum waves. Money flow is something that just kind of helps validate what I'm doing a bit. But really, I just use these momentum waves and the divergences. And that's all you need to do. This is the cheat code. You think you can do that? Do you think you can say, hey, price is coming up, Lever Atlas is telling me momentum is coming down? That's a divergence. That's a bearish divergence. That means the price is probably going to turn around and go down. or price is going down, and oh look, momentum is going up. Not in this case, because you want to have a lower price and going up. But anyways, you understand that. Let's go back real quick, see if we can find a divergence real quick. Here is one. Now there's not a line drawn for it, but I see it. Oh, there's a line drawn for it. It's a slight one. This green dot going to that. The green dot's there, but price is clearly from this spot coming down. Momentum is going up, and that's a really good spot right here, because this is the real divergence from this dot to this dot, right? Because look at this one. That's where the bottom is, and this little dot right here is right here. So price clearly came down, and I really look for these. I call these trigger waves. When this kind of situation happens where price came down and momentum came way up, where it's ready to just bust. And what happened? Whoop! That's a big one, right? Went all the way from 41.50 to 46.60. It's $500. That's over 10%. So that means if you rode this the whole way, which I don't recommend doing, take profit along the way. But there's always about 25% of my trade. Say I got $10,000 or $1,000 in this trade, I will leave 250 of it on the kind of let it ride type thing, which would be until I see a divergence, which would be here. Here is where I would get out, right? If I got in right here on a long, meaning I'm making money when it's going up, I'm looking for something like this to happen where it tells me it's time to get out. This is exactly where I would have got out, because I see that divergence happen. And what happened? Went down. And it barely went up any higher, and then it went down more. So then what happens here, your question is, well, wait a minute, can I do a long then a short? Yes, you can. I go right here, take the long up here, whoop, and then see that print. I'm like, all right, I'm going to take the short. So I am accumulating Ethereum in this case as the price goes up, and then again as it goes down, right? And from down here, I basically double every Ethereum I had in here. I basically doubled. And then every Ethereum up here, down to here, I got what? About another 0.6, 0.7. So pretty powerful stuff. So let's go back over here. Here's how we would place a trade if we were going to place one. We're in Ethereum. Now I chose up here isolated. You always want to choose isolated, because that means you can only lose what you have in the trade. If you select something else called cross, that means it can dip into your entire account. You don't want that. So there's one part of risk management. And now I did 10x leverage. You can do everything from 1x leverage, right? It was that example I showed you back here. If you do no leverage, that means you do a long, if the price goes up 10%, now you have 1.1 Bitcoin instead of 1. If you do a short and price goes down 10%, now you have 1.1 Bitcoin instead of 1. Or if you do 2x leverage, 1.2. 1.2 in a long, 1.2 in a short. Okay? If you do 10x leverage, what? 1 Bitcoin into 2 Bitcoin. Okay? So I usually do 10x leverage. That's me. I don't necessarily recommend that for you. I think you should start out with 1x leverage. Don't even do leverage. Just trade. Just do 1x trading, right? That's the safest thing for you to start with, and then work your way into 2, and then 3, and then 5, and then 10, as you get better at riding that bicycle, as you've developed your skill. So what I would do here is I would pick my order price. First of all, I decide, do I want to do a long or short? So let's go back to Lever Atlas. This whole thing is on tradingview.com, by the way. That's where this price thing is. And this is a special indicator. This is Lever Atlas. I have a free trial up for this, at least at the time I'm recording this. Go to dailycryptobull.com. Plus, there's more of there's another crypto trading masterclass, although this is a pretty good class right here. And Leverage Atlas, I'll just, when you become a member, I'll just add it in to your account. You know, because I'll know what your account name is, and I'll add it into your account. Not that I need access to your account. You give me your username, and I give you permission to use this. So therefore, it gets added to your account. But I never have any access to your account or anything like that. Nobody does. So let's say we came in here and we were like, all right, oh, wow, look at this. That little trigger wave printed here from up here. Clearly a bearish divergence, meaning price is going to turn and go down. Right? Let's say we got in at 48. Say we got in at 48.10. All right, we're like, hey, you know what? We're going to do a short, right? We've decided we're going to do a short because we believe price is coming down based off of Lever Atlas, this cheat code telling us which way it's going to go. So we go, you know what? 48.10 is where I want to do a short, and I want to put in, you know, $1,000 worth. Now, since we're doing 10x leverage, I really only have $100 in this trade, $100 worth of Ethereum, because 1,000 is 10x from 100. So whatever I type in here is the 10x price. Okay? If I did 1 leverage, which is no leverage, if I put in $1,000, I'm actually putting $1,000 of my own Ethereum. But if I do 10x, I'm only putting in $100 of my own Ethereum, but I'm getting the power of $1,000 of Ethereum. Same thing here. There's 10,000. That means I'd be putting up $1,000 of my Ethereum, but I'm getting the power as if I were trading of 10,000. And I would do a short. So I would click this button, sell short. You can set a take profit here. You can say, hey, you know what? When it gets to, you know, 47.50, just take me out. But I never do that because you can always just add it in later. And I never set a stop loss either. You may want to. That's up to you. You may want to. You may say, hey, you know what? If it gets to like 48.25, just close out my entire position. I'll take that little loss. Okay? But I don't do that either. And I would just click this button, sell short. And as a matter of fact, I'll do that real quick. And what happens is it goes over here into active. Active order, not active position. So this is just waiting for it to get taken. Okay? This is saying, hey, if the price comes up to 48.10, I want to place a short because I think the price is going to go down. Right now, the price is at 47.49. So this order is not getting filled. When it does, it'll come over here to positions, and it'll be an active position. But right now, it's just waiting to be filled. I'm going to cancel this, though, real quick. But it would be over here in position, and when it is, you'll be watching all the profit and losses going on right here under unrealized P&L, profit and loss. So that means if I get the order taken at 48.10, as it goes down, say it comes back down here to 47.47, I'm well into the profit. It has gone down. In that case, it will have gone down, what, 1.5? Call it 1.5%, maybe not quite. So 1.5%, but I'm on 10x leverage. So that means I'm making 15%. And again, if I were doing $1,000 of my own Ethereum, which means 10x leverage makes it 10,000. So I'm getting the profit off of 10,000. So if this went down on a short, 1.5%, what's 1.5% of 10,000? It's $150. So that means I will have made $100 on my $1,000 of Ethereum. I will now have $1,150 in Ethereum if I were to close out my entire position at this point. Does that make sense? Now, if this thing goes down from 48.10, where I placed that position, it goes down 10%. Guess what? Since I'm on 10x leverage, I have now doubled whatever I have in here. If I have $1,000 of real Ethereum in it, and I'm doing 10x leverage, if it goes down 10%, I've made $1,000 in Ethereum. So now my $1,000 of Ethereum now turned into $2,000 worth of Ethereum. And I mean actual Ethereum. This is the way it will get added into your account as actual Ethereum or Bitcoin, whatever you're trading with. If I went over to Bitcoin, I would just do the same thing, right? If I wanted to get in at 68,000 and I did a short and it went down 6,800 on 10x leverage, that's what I would get. But you know what? You can just do one. You don't have to do leverage at all. You can just do trade, right? Because if I go buy Bitcoin on Coinbase, I have to hope for the price to go up because that's the only way I make money. I don't get more Bitcoin. It's just the way my Bitcoin becomes more valuable. It's the only way I can make money. That sucks. Here, I can put my Bitcoin in here on a trade. I don't even have to do leverage. I can just trade, put it up, say, hey, I think the price is going up. Because if you're buying Bitcoin, you think the price is going up, don't you? So wouldn't you rather get that price appreciation and get more Bitcoin? Yeah, of course you would. And what if the price went down? Wouldn't you like to get more Bitcoin? Yeah, without paying any money? Yeah. So this is leverage trading, basically. The link in the description. Go to dailycryptobull.com. There's a free masterclass that goes into more depth on this, and a free trial to Lever Atlas, the cheat code. I mean, that's what this really is. This is the cheat code, because this lets you know when stuff's changing direction. And that's all you really need to know with trading, is knowing which way the price is going to go. Not forever, just for a period of time, right? Here, boom, look, down. Another little dot, down. And we go back here, price going down, momentum going up, good spot to get in, boom. Price, look, price going up, momentum going down, boom. Isn't that nice? Price going up, momentum going down, boom. That's leverage, that's trading. Think you can do that? You think you can see? There's only two things to look at. You got to know which way the price is going, and you got to know which way the momentum is going. That's it. And I trade off the 1 hour. I don't place a trade unless I see a divergence form on the 1 hour. That's what I've learned. On the 1 hour is what I use by far the most. Okay? Other than that, that's all I got for you today. This was probably a lot. You might want to watch this again. Take me up on the free, if it's still available, take me up on the free trial of Lever Atlas and just get started here. You really don't have much to lose at all. You just don't. But you have a whole hell of a lot to gain, because remember, the name of the game is accumulation. That's what smart money does. That's what we should be doing. All right. Hit that like button, hit that follow button, stay classy. You're awesome.